Howdy there, this is MSP. So we're going to discuss the basics to how to draw Fibonacci levels. Alright, so what are Fibonacci extensions? First, let's give credit to our favorite mathematician, Fibonacci. He was an Italian mathematician and from the Middle Ages, and he was born in 1170 in Italy, okay? So Fibonacci levels are what life is basically, how it is basically created. So from a technical perspective, it was converted to a chart, and it's a way to get support and resistance levels based on certain ratios, okay? So what I want to do is just show you the basics of how to draw Fibonacci levels on your chart, and in order to get support and resistance levels. So Fibonacci numbers are numbers that have a sequence, and it's called the Fibonacci sequence. So the first number start with 1, then we got 1, and then we got 2, and then we got 3, and all it's doing is adding the past two numbers, okay? And this is the formula that creates everything in existence in the universe. And so as far as creation, so considering that human beings are a creation of the universe, their psychological mindset should be in sync with those levels while trading as well, okay? So we're going to draw those levels and see if that is actually a fact. We should see if it's in sync. Okay, so I have an AMD chart here, and price action looks like it is in disarray. But is it? So I'm gonna go to find my fib retracement, and I'm going to look for a high and a low. So I want to look for when price started to bounce to when price would reverse. So I'm looking for reversals to draw my Fibonacci levels. This is not rocket scientist stuff here. So I put my first level near that top candle, and my next level near the low right here, okay? So, and you could always adjust it and see, you want to look and see if price is responding to these levels. So we could see that this is resistance, we could see that this is support, and we could see that this is support. So that's how you gauge your drawing of Fibonacci levels. Now, it's not important to do, they got what, the retracement type and this type. You don't need to do all that. All you need to do is find a peak high and a peak low. It takes a second. So this is not rocket scientist stuff here. It's pretty simple. So let's go draw that again. So I'm looking for, I'm on a daily AMD chart, grab my Fibonacci, I click my mouse, I hold it, and I drag it to where I think support's at. Let's say I thought support was, I want to start from the beginning of this pop here. So I could say here as well. It doesn't have to be exact, because price action is not exact, because we could see there was a breakout above resistance here, and it pulled back and tried to hold support and broke down, right? You want to just slide it up or down a little bit so it's more in sync with the movement of price action. Okay, so that tells me, or you could just redraw it from that bottom to the top. Now, the bottom of price action does not necessarily mean the bottom per se. It could be some sort of flush or something. So that's why you want to look at your lines in relations to price action to see if price is moving like it's respecting your levels. And it looked like, we zoom in a little bit, we could see price is respecting our levels. Did a little breakout, pulled back to support, held, chopped, broke support, dropped, broke support, dropped a little bit below, came back above, pop, 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 little breakout, retest. This is not rocket scientist stuff. Don't let nobody tell you that you need to do this and that. All I got to do is be close, because support and resistance is a zone anyway, right? We know that because we looked at the support and resistance video. So that's how you create your levels. Now, you created your levels already, so you're trading. Okay, so you're trading, and now price is moving along. So this is July 12th there. So let's tell this to go play the rest of the price action, and we could see that our Fibonacci levels are still being respected. So this is just a gauge to see where support and resistance levels may be, or where the traders are actually trading. Okay, so that looks really good. Met support, broke it a little bit, retested support, held, went back to resistance. Look at that. That's just perfect. This is not rocket scientist stuff here. So there's significant levels and all that. I normally don't care. Okay, I'll be honest about it. What's the significant level? What's not the significant level? This is just basic, so you can have some support and resistance. Maybe in the future I'll do another video on a little bit more, or some sort of live broadcast. But right now, the goal here is just to get you up and running, so you know how to create your own support and resistance levels. If you want to draw horizontal lines, that's just fine. Let's go in and end this. So let's see what happened here. So we can see prices moved along these levels. Now we see price went above. Okay, so price went above the 100%. So the main ones to focus on is the 50%. I think they say is one of the most important levels. But I use MSP ALGO artificial intelligence trading bot, so I don't really worry about what a significant level is. If it's going to bounce or it's going to drop, that's all I care about. That's just me. If you want to know more in depth, you may want to go on and read up on Fibonacci levels or get yourself a book. My goal is just to tell you how to draw it. Okay, so now let's say this thing ran to the moon. Let's go back in time. We're gonna say okay, we drew our Fibonacci levels and on a daily chart. Okay, so we drew our levels and prices above our level, right? Eventually. Let's jump here. If it'll let me. I think I want to go back. Okay, we're just going to go on and cancel this. And look, okay. That's too complicated. But we could see that we had a 0 near the lows. And so you're looking for reversals. And then our 100% was here, let's say. Because it was back in time. And we see that price actually broke out of the 100% range. All I do is look for, I just drag this thing and I'll go find another lower low. So it looked like here is where this new level began, okay? And it should still be in sync. You look, make sure, see how it's pulling back here? So we see it hit our support nicely right there. And near support here, because charts aren't the most organized at its exact price anyway, right? So it's really not that important. But what is important is that you know where support and resistance is. So that's how most people draw them, and you see it take a second. But this is how I do it. Another way I do it is by using advanced warning pivot points. So there go my pivot points on this daily. So I just look at a pivot high and a pivot low, and I'll draw my lines. Let's look at another chart. Another example. All right, so we're gonna pretend that don't exist back up there. We're gonna draw some lines here. So we got our 100% should be at the top, and a 0% should be at the bottom. Another way I like to draw these lines, since I really don't care, it depends on what you're trying to accomplish. If you're an investor, you probably want to use a longer time frame, like a monthly, right? So let's look at a monthly. So back here, let's look at this. When I use pivots, I'll just go with the reversals. I could care less about old price action. Why? Because what's happening now, counting what happened in the past, is not as significant. So, so I got a pivot high, and I got a pivot low. But since this is the monthly, you kind of not day trading. So we can see we got a high and low here, so that's what we're going to use. We got a pivot high, and we got a pivot low. 9 times out of 10, that's showing perfectly. You can look at how price is moving, and it looks great. Look a whole quarter of a millisecond. So now in the future, it should be support and resistance, right? But price, so that way you can kind of gauge where support or resistance is at. And if price move up, you don't even need to really be short. You can just look for the like a turning point where price pulled back and going up. But since this is the monthly, we're going to reach all these lines. So we can see there's a turning point here and a turning point there. Not sure where the stock's at. Yeah. So see how it's moving nicely? You always just look, make sure it's moving nicely, and that's it. Now while day trading, I do it different. I don't care about all of the price action. All I care about is the most recent price action. So let's go to another stock. We're going to go to Apple. And we're going to go to a day trading time frame, an hour. So I'm looking at this chart on the second. Say here. Okay, so I'm looking at this chart the beginning of July, and this is the price action I have. So all I want to do is see where the last high and low was of a reversal. So I'm gonna grab my lines. I see my high there. That's where price came from, and it dropped to this low here. That's all I care about for day trading. People could say what's wrong and right. That's fine for them. I use my own strategy, and it works just fine. Okay, it's up to you. You could tweak it however you want. So pretty much, I'm just looking for the most recent high and low. So we could see that 100% is at the top, and 0% is at the bottom. Okay. So now, as we're looking at this, see how perfectly in the future these pivots are respecting this Fibonacci? So you know what that says, right? The traders are using Fibonacci to trade Apple. Okay. So what are these pivots saying? Hey, you hit a Fibonacci extension. You hit resistance. So when it pulls back, now if you didn't have it, let's say you don't know about support resistance and you didn't have it, you don't know where this is going. You don't know how far it's going to pull back, and really you don't know why it pulled back. You don't know why that stock pulled back. Stocks move for a reason. You don't need to be lost. Some people choose to be lost. We choose not to be. Okay? So, as price pulled back, 9 times out of 10, that trader think is pulling back here, right? But if you have your support and resistance levels on your chart, and your pivots, if you just had the pivots, you would have been fine. We could see that is one of our favorite step down pivots. We know that move, right? What is it? It's supposed to be chop, but this thing dropped. But we know it's going to retest, a breakout, drop. But anyway, that's not what this video is about. So we're going to go put our fibs back there. So when price pulled back, you know why. Because I hear traders say, oh, the indicators ain't doing this or whatever they're using, RSI, whatever. I'm not going to say anything negative. I just don't believe in lagging indicators. Some people, that's all they have. They got to use what they got, right? We don't have lagging. We don't trade lagging indicators. We're looking for leading indicators. Okay, but Fibonacci is just a technical analysis of where support and resistance levels are. So when this stock is pulling back, you know that this thing is near support. So trader A, Mr. Bear, short, or a swing trader, don't have to be a bear. They got a bear, and there goes just a regular swing trader. They don't give a damn if the thing going up or down. All they care about is making money. They sound like MSP. That's me. And the MSP family. Okay, shout out to the MSP family. I love you. Let's make some money. This is going to be one of the most exciting years that you've ever experienced in your trading career. I guarantee it. If you watch these videos, watch them all. Okay. So they got the traders. They short. They saw it dropping here, so they went and short. And they're thinking, if they chew their own support line, they probably got support. You know, you could show your own support, that's just fine. But you got your traders that think it's probably going to go back here, right? That would make sense, because that was where it was, so you would think that is support. And it just depends on what the trader want to do. They don't want to give me my line back. I don't remember where I had it. That's good. You see, all I did was go to the lime green pivot high and a gold pivot to help me out. And then you could like adjust a little bit. May say, well, it looked like support's just a little bit lower than that. Or resistance just a little bit higher. Perfection. See the rejection, see the support. Alright, that way when price pull back, you don't get caught off guard thinking 180 when in reality support's 184 and support is 185, right? So let's look at a smaller time frame. So we're gonna remove all our drawings here. Remove all drawing tools. And go to a 10-minute time frame if that's what you day trade. And find some time in the past here. Let's say that way we could see what happened after we made our Fibonacci level. Now on these little 10 minutes, it seems like it takes forever, so I'll find some candles because they sold. So what I'm gonna do is I'm gonna make it small so I could gauge where my high and low is. So I could kind of gauge there's a high here and a low here. I'm not caring about so this is the date. The future didn't come yet, it's the past. So we're gonna draw our Fibonacci, go trade and view charts. and click Fib retracement, and you find your high when it reversed and your low. Notice I'm just connecting a 0 to the gold pivot and 100% to the lime green pivot, the highest one and the lowest. Let's see how that work out. You just look at it to get a feeling if we drew our lines correctly. And it looks good. Okay, so let's see what happened. See it conforming to your fibs? Pretty cool, isn't it? Look at it. Okay, let's pause this. Look at the gap now. Look what it did. Right to the 50% fib and bounce. So that is the advantage of having support and resistance on your chart. And that way you can know where you could go long or short. It can help you gauge that. So when a pivot, so let's say price is pulling back here, and you see the little pivots, those are just in between support and resistance, so they're not insignificant. Pivots that are significant are near support and resistance. Pivots that are in between support and resistance is not significant. That way you don't get trapped in believing that price is near any significant support or resistance level. It's always best to try to take a trade near resistance or support. Whether you could take a long or short near resistance, just depends, or long or short near support. And that concludes the Fibonacci levels. Happy drawing. Next video is going to be super exciting, and it's going to be a surprise, and we're going to start talking about MSP ALGO, artificial intelligence, trading bot signals in conjunction with our charts. Whoa! So side-by-side trading.